Mike, no, I'm gonna let Ian ask this question, but I didn't even get a chance to introduce Mike. I want everybody to understand who he is. So, Mike Novogratz, is it okay if I call you a Bitcoin billionaire? I just
You can call me whatever you want to call me.
Bitcoin billionaire, early adapter. I like that too. Yeah. I made it up. Early investor into Bitcoin. Mm-hmm. Used to run a hedge fund. He's now the CEO of Galaxy Investment Group, which focuses on cryptocurrency. And yeah, Bitcoin billionaire. I like that. I'm running with it. So if anybody's not familiar in the crypto space, you have what's called like whales. Mm-hmm. So there's not a lot of whales to my knowledge in America. A lot of them live in Asia. But Mike's a whale.
We got one.
No, we got one. There's only like there's only like 3 of them in America.
If you know the Bitcoin
space, two of them are twins.
Exactly. When the whales move,
yeah,
the ocean gets moved.
So I just wanted to put that out there just for people to understand. You know, we spoke to Mark Cuban, but Mike, obviously, he might not be as known, but if you know, you know. Mm-hmm. And it's extremely rare to have the opportunity to, you know, this is kind of like mentorship to actually hear from somebody of this stature. So wanted to thank you for taking out the time, and, you know, hope everybody that's listening is paying attention and, you know, taking down notes, because this is $1 billion worth of game.
Literally.
Literally.
Yeah, literally.
Ian, you asked your question?
Yes. For the traders that you were mentoring, what percentage of a stop loss do you think they should use when doing investing or trading crypto and in equities?
You know, a little bit depends on how old you are and how much risk you want to take, right? So you got to go in thinking, if I hired someone and I said, hey, you've got $10 million of capital to play with, and you're only allowed to take, if you lose 15%, you're fired. Because that's broadly what happens. Yeah. You get hired at a professional shop, you get somewhere between a 10 and a 15% stop loss. They got to understand what their style is. If that's a 15% stop loss, so they can lose $1.5 million on the year on that 10 million of capital, well, you better not lose more than 250 in a month. So you start sizing your trades. You know, you want to win 3 to lose 1, kind of, you know, 3 to 1 bets, 4 to 1 bets. When you get up, you can start getting more aggressive. But it's not as glamorous of going for the 100 to 1 shot, because if you think you're going to hit the 100 to 1s and you ride it down too far, like the guys I was talking about, they lost their license to drive. And so what you need to almost tattoo into yourself is, I will not lose my license to drive. I will not embarrass myself. I won't lose more capital than I tell myself I'm going to lose, or I tell my investors I'm going to lose. And that has to be like a religion. Listen, it's hard to stick to that, right? Stopping yourself out is the hardest thing to do. Well, it's the second hardest thing to do. You know what the hardest thing to do is? When a trade's really running, you want to ring the cash register. We used to call it the pain of the game, right? You got to handcuff yourself to the seat sometimes when you got a trending market. When you're above the 20, when you're above the 50, when you're above the 100-day moving average, and the thing is beautifully trending, just sit. What do you mean just sit? I don't want to sit. I want to trade. Just sit. And so there's 2 really hard things to do. It's knowing when you're in a trend. And listen, you can use indicators to know when you're in a trend. If you're above all the moving averages, guess what? You're in a trend. Just sit. Now, you might have a style that says, hey, when it gets 1.5 standard deviations from the 20-day moving average, I'll trim a little bit, right? You can have your own style. There's not one style, there's 100 styles. But broadly, great fortunes are made in trend, right? Great fortunes aren't made trying to reverse, trying to call bottoms, trying to call tops. That's a really dangerous game. Great fortunes are made in trend. And, you know, when your trend runs out of momentum, you probably should have less risk in it. Bitcoin was a beautiful, beautiful trend. And we traded up to 64,000. There's a lot of psychological energy in that price because Coinbase had their IPO. You started seeing all kinds of crazy stuff in the alt markets. You know, Ripple XRP token went up for no reason. All Dogecoin's worth 50 billion. Those are warning signs that things are getting way too hot. And so guess what happened? Bitcoin goes from 64 to 48. That's a big freaking correction. Now, were you supposed to have sold it like a genius at 64? No. But when it broke down and then bounced back up to 58, you're supposed to lighten your position a whole lot because the momentum died, the trend broke, the 50-day moving average broke for the first time in a long time. I'm still really bullish Bitcoin. And quite frankly, I bought some at 48, I bought some at 50. I buy some, I think the low it's going to go, someone said 42,500 or some, you were much more specific than that. I looked at it, I said, I had bids from 45 to 42 on the weekend, just in case there was one of these weekend, flushes.
Yeah.
42 should hold. We see tons of institutions coming to buy this thing. And so I'm not worried at all about the long-term health of Bitcoin. Goldman Sachs is coming, JP Morgan's coming. They haven't even set up their funds yet. They're doing it. And so institutions are coming to move into the Bitcoin space. I'm positive. It's not, it's not like I'm guessing, I'm actually seeing. I see the order book. And so that gives me an edge. But tell you what, hell of a long way from 58 to 42,
When it was 44,000, you said you were on record saying that I see it going to 100,000 by the end of the year. And all companies.
I still do. I think we're going to consolidate here. We're going to consolidate between. I hope we put the lows in 48, 48 and 60 for a while. If it gets above 58, stays 60, then I think we head to new highs. And I don't know. Listen, it's a long way to the end of the year. We got 8 months left. That's a damn eternity. Think about where we were 4 months ago, 5 months ago. With a Bitcoin started the year 29,000. And so right now, if you were max bullish at 64, you probably have a smaller position because we're in this consolidation zone and you're watching. Listen, there are other things happening in the crypto or that. I mean, the Ethereum chart looks explosive. The Ethereum Bitcoin cross just keeps going one direction. There's this narrative around Ethereum, right? It's going to have much cheaper gas fees in, 6 weeks or something with the
2.0
on the way.
Well, it's the the 159, where you're instead of paying the miners so much, you're actually burning a good portion of the tokens, and so gas fees are going to go way down. That's what's driving some of this rally. Decentralized finance, NFTs, all being built on Ethereum, and so the narrative for Ethereum is really good right now. We just launched an ETF in Canada. Galaxy did. So all of a sudden you have an ETF in Canada that took in a bunch of money the first week. And I think it's having its moment. The other cryptos, which are fascinating to me right now, are these. So originally we had the Bitcoin ecosystem and the Ethereum ecosystem. And everything's being built on mostly Ethereum. And all of a sudden, the guy from Binance, CZ, said, I'm going to create my own Ethereum, right? Binance Smart Chain. And a guy from Korea named Do Kwon, I'm going to create the Terra network. And now Sam Bankman-Fried from FTX, I'm creating Solana. And they're building mini Ethereums, competitors, that are not nearly as decentralized as Ethereum, but they're faster. And, you look at the TV, you don't know what's behind the TV, right? Who in the hell cares what's behind the TV, how it works? We just turn it on, we're like, good TV. And so there's a debate, will consumers care how decentralized the blockchains are? Right now, they're just saying, hey, is the consumer interface, is the user experience sexy and good? And so you're seeing these new ecosystems explode north. That's money coming from Bitcoin and Ethereum into the Solana ecosystem, the Sam Bankman-Fried stuff. Terra, I bought this coin Luna 5 months ago at like 27 cents and it's now $18. Yeah, you don't have a lot of those in your life. You kiss your wife and buy her a dog from Korea, which I actually did. I bought my wife a dog from Korea.
Literally.
Literally. And so, I think, listen, the macro markets have never been more interesting, and crypto is macro on steroids right now. And so it's a fascinating time to be a trader. It's really volatile. And so you can't say, well, it's so volatile, I lost all my money. No, you have to adjust your position sizes. And so if you're used to taking a 10 unit S&P position, which trades at 20 vol, and you're trading Bitcoin at 80 vol, you should take a 2.5 unit Bitcoin position, right? Like, and that it's just the math. You don't have to be a crazy kamikaze in volatility just because you're trading crypto. You just have to adjust your sizes so you preserve your capital.